I just want to say hi, welcome everybody. Hello to all our members. Appreciate you joining. As Mandi said, I work with members. If you have any questions about membership, whether you're a member or if you'd like to join, please feel free to reach out. I'm happy to schedule a time so we can discuss things and really, talk about how you can use GHA as a tool in your toolbox and how we can support you. Yeah.
Cool. And thanks to all of our members who are in here, by the way, also. Okay. Thanks, Adam. It's all you.
Well, I appreciate it. It's nice to, see everybody. It's great to, know that there's a couple other people in the room that know about R&D and what happens and kind of the qualifications. So they'll keep me honest here. There's no sales pitch. So, my name's Adam Farnsworth. I run Leaf Specialty Tax Consultants. We are a boutique R&D tax credit firm. Or specialty tax credits. So we primarily deal with R&D, but in the US, there's also employee retention tax credits that we also help out firms with. As we talk today, I'm very much an interactive person. If you guys have questions, speak up, put something in the chat, and I will answer as we go. I want this to be more how I can help you guys versus just presenting and spewing out information. So our company has about 7 people. We have been around for 7 years, and about the same time, the R&D tax credit became permanent into law. What else, Mandi? What else did you want to know about me? I got 3 boys, 9, 8, 4, and they drive me crazy. And then my wife honestly keeps me running. So. What else am I missing?
Awesome. How have you been? You've been doing this for quite a while. Talk to me about let's dive into this and then I'll ask questions. Is that okay? Because I've got all kinds of questions. But if you want to just go over just the basics of, what is the R&D tax credits, the who, what's, where, when, why, how we use it, and then what people should be watching out for?
Absolutely. So I think we first need to start with, most people on here probably aren't accountants. If I'm, wrong, tell me. So how many people, by show of hands, how many understand what a credit is versus an expense? A couple. So high level, everybody wants to get the deductions on their tax return, reduce their tax liability, whether it's hemp, cannabis, manufacturing, technology. And, as we first define this, and when we look at your tax liability at the end of the year, you take your total sales, you reduce it by your expenses, it gives you your net income, and then you're applied a tax based on that, and that's a variable. Well, a tax credit allows you to take a dollar for dollar reduction of that tax liability, to essentially make it so you don't pay anything. And so R&D has been around since 1981. And its purpose was to really drive innovation here in the United States. Now, for those of you that are international, many other countries have R&D tax credits. I'll be talking specifically about the United States. But, Walter, you said your firm's based in Paris. It's international. A lot of companies governments have set up this process because it's so helpful for innovation. I think the next place I'd like to go is to, if I can, just share my screen and give you guys kind of a quick rundown about what R&D is. Let's see, where's the share?
At the bottom.
There we go. So that should pop up for you.
Perfect.
Wonderful. So when we look at R&D and we really go into define what it means, and in the hemp industry, it's very pervasive, but it's a planned discovery of new knowledge that's going to help you develop a product or process or a technique, a formula. The idea is, what are you doing to make your business better, bigger, faster, stronger? And in that case, what you're able to do is then improve the innovation as you progress, right? So where Mandi and I had talked before, most people on this call are working in some function to be able to drive that development, to make something better. And so that's where R&D can come into play. The reason people go through Oh, I've got an audio on. Can you guys hear me now?
Yeah, you're good.
Okay. So these tax credits that come into play, really what it is, it allows you to take up to 20% of your development cost, depending on your location, back as a tax credit, allowing you to reinvest that money into your business to be able to drive additional development, increasing innovation. The way we get to that 20%, so Walter, I'm sure you look at that and you're like, well, where does that come from? The federal credit is anywhere from 6 to 8%. So for those of you that are, in a state with no income tax, maybe Wyoming or, South Dakota, you're probably looking at more of like a 6 to 8% development. Where there are states that have credits that are up to 12.5%. In total, we can look at actually that 20% total. So Arizona, Utah, they have these large state credits. So in total, we look at kind of where that can come up to 20%. Is that Walter's shaking his head like, all right, I'm with you now.
Yeah, I'm with you.
So different, if we talk about, the United States, it's very, that's a large chunk of money. Canada has what's called shred credits that are incredibly, valuable, and those can add up to 55 and 60%, depending on locality. So if you are one of the international, users on here, definitely check in with your accountant or your local regulations to be able to decide if that's something that's available to you. So when we look at this, I'm going to get rid of the slideshow for a sec. So when we talk about this, get rid of my PowerPoint. When we talk about R&D and we talk about why this is valuable, I think the key that we come down to is first, corporations and what they're doing, they use this in order to advance themselves. And if we talk about why R&D, it's because that value is much higher than a lot of your other available tax credits. The first thing we need to do, though, when we start thinking about R&D is we need to decide if there's a project that you guys are working on that can qualify. When we do that, we first look at what's called the 4-part test. So I'll pull up another slide here. Share screen. Okay. So this is what's called the 4-part test, and it's what Congress defined as R&D at the time of writing. And it's a very broad explanation because it comes across for so many industries. So as we think about this, think about the projects that you're currently engaging on, and you'll be able to kind of tell just at a high level whether it's worth talking about. So the first thing is, are you developing a new product, process, technique, formula, or invention? Or are you improving an existing product, process, technique, formula, invention? And when I say, what are you doing with it? It says, are you improving the functionality, the performance, the reliability, significant cost savings, efficiency, durability? When we think about hemp, right? I've just worked on a company in Colorado that was really focused in on the cannabis aspect and, reducing the THC levels and, getting it to be legal. And with that, they went through an entire process of, hey, we have to make it reliable at this process. So we have to develop a process from genetics through, looking at the farming processes, to looking at the processing, to looking at transportation, to looking at the environment, to be able to have a consistent performing hemp product and cannabis product so that we can sell it. And so there was a lot of performance and reliability in that they had to create. For the things that we don't want to focus on, and this may not be as applicable, but R&D doesn't apply to something that's strictly aesthetic. And so we can think about this as more like, does somebody like red or blue, right? From a product standpoint, Congress kind of said, I don't care whether it's red or blue, I care whether it works. And so the only time we get into R&D on color differentiation or aesthetic purposes is if it makes engineering difficult or there's an engineering or a technical difficulty with that. Okay? As we talk about the next pieces here, you have this product, you have this idea. The next question is there any sort of uncertainty? So is there a capability uncertainty? Can I accomplish this goal that I set out to, right? I had this idea of a new discovery, new knowledge, but I couldn't get it there. That's okay. That would be looking at an R&D project potentially. More common is a lot of us feel like we're pretty smart. And so the idea is not whether I can get there, but what's the best route to get there? And so we talk about this methodology and alternative processes. Do I go route A? Do I go route B or route C? Which one's going to be more efficient? Which one is going to get us to the end goal the best at the least amount of cost? And trying to understand that takes a lot of research. So if you have a goal, that it's difficult. The third piece on the bottom right talks about the process of experimentation. In this case, we say, how are you overcoming that uncertainty that you had? You had all these different alternative processes you could go through. How did you choose which one? How did you test it to figure out whether it works? Did you model? Was there a systemic process of trial and error? How did you move and progress through that R&D project? And the last thing that we want to focus on is the idea that this is a technical process, right? We still want to stay within the realm of hard sciences, chemistry, biology, engineering, computer science. Those are great things to focus on. From an R&D perspective, if you're only focused on, can I sell it at $10 or $12? Congress doesn't care about that. That's more of a business R&D versus a technical R&D. So we want to focus in on the technical side of things. That is a lot of information. Does anybody kind of have questions before we move forward on that?
Ahmed?
I got a lot of questions.
I knew it. I'm glad you do, actually.
Okay. Adam, thank you for the information. I think some things that I wanted to kind of point to is, let's talk about when you do some research and development and then you apply to the federal government for a credit. What happens is you don't actually get a check in the mail. What happens is you get to deduct some of your payroll expenses, for example, SSDI, against that credit, right? So you're an employer and you employ some people that do research and development, and then you get this R&D tax credit for some of the taxes you paid towards an employee's employment taxes. Is this the methodology that you're going after?
So there's two things. What you're talking about relates to kind of a payroll tax credit. So R&D is first used as an income tax credit. And so once we identify whether or not you have a project, what we do is we evaluate the payroll, we evaluate the supplies, and we evaluate contractors that are used. And they all kind of go into this R&D bucket, okay? So it doesn't necessarily change your expenses for your income tax, but what it does is it says, can we calculate a benefit based on the fact that you're putting a bunch of money into this bucket? If so, again, it doesn't change your expense, we can get you a credit on top of that, okay? So if you are a startup company, meaning that you are less than $5 million in revenue, and within your first 5 years of business, then you can elect to transfer that credit in the United States, right? This is where kind of the focus is, from your income tax to your payroll tax return, and be able to use it to offset the FICA or the federal, the 7.5% that we take off. Does that make sense?
Yeah. So one way, so typically in a startup company, a lot of times what happens is you may be running in the red for several years because you're developing something new. So if you were to say, you're going to get an R&D tax credit and you're going to be able to take and figure out what your net margin is, and then write down that particular, you pay tax on what you made after you get your net margin. and then you say, okay, you get a credit towards that. But what if you're not making money because you're developing a new product? So then you can write that down towards the employment taxes that you would pay.
That's correct. That's where you make the election to transfer the credit from the income tax side to the payroll tax side.
Okay. Now let's talk about, there's when you, like, let's say you have stuff that is in COGS, that is basically you're making a product and it's your cost of goods sold and you buy stuff, that's not counted. But what is counted is, for example, things that are non-COGS that are for the development of something new.
Not necessarily. So sometimes even cost of goods sold can be picked up as R&D. So when we talk about supplies, and this is where the COGS would come into play. You've got, when you go and start creating a product, you know, your prototypes, your first run articles, you know, if I'm a manufacturer and I have to create 100 widgets before I know that my process will keep up, and I sell those 100 widgets, well, the cost of those 100 widgets is COGS, but I can still pick that up as what's called a first article. And so we end up being able to utilize some of that for the R&D credit as well, and throw that cost into that bucket that I was talking about related to the project.
Okay, so in some limited cases, you could count COGS. For example, if you're doing a manufacturing transfer and first production runs.
Correct.
Okay. Another question I have for you is the nature of how the research and development was funded, because I think that could trigger whether or not you're at all eligible. So for example, when you're running a corporation, there's a difference between the funding that was funded internally from profits and proceeds, or say the owners of the company, versus if you were provided a grant from the US government, or you had a partner that was, for example, say another corporate partner that funds your research and development because you have a joint development agreement. So maybe we talk a little bit about what is considered qualified research and development funding based on the source of the money.
That's an excellent question on that. So when we start looking at these projects, right, we start at the project level. I told you the 4-part test. You got to have a goal, has to be difficult, got to test it, has to be technical. There's 2 other requirements that come into play. One is intellectual property, or IP, right? Do you own the thing that you're working on? Okay, and we look, if you're working on a project for somebody else, we look at what that contract says. The second thing is what you're talking about with funding, Ahmed, which is, are you financially at risk for the development? So as a general rule, right, it comes down to, if you are to succeed in funding, right, or if you are to fail in funding, is somebody else going to pick up the bill? If you get money from somebody, an investor, for, you know, let's call it 500 hours of R&D, and you blow past that and you fail, and are they going to pick up the bill and come in? If it's the US government that's providing a grant, right, they're picking up the bill. You're not financially liable for success. They're just giving you money to start working on something. So you have to be financially at risk for the success of the project, and you have to own the intellectual property. Now, there's a couple other people in here that do R&D. I know Charles is on here, Walter. You guys have anything to add on that?
No, that's it. That's it. You know, whoever has the risk, that's it.
That gets fairly complex with joint ventures. You know, so it's something where you want to evaluate, you know, ownership. And with joint ventures, you can actually allocate costs as well based on the contract. So there's kind of a lot to dig into, which is why I have a career, because the IRS makes things so difficult.
So let me ask you this. When you look at the idea of an R&D tax credit, there's a question of when you did the research and development versus when you applied for the tax credit. And the reason being is that, like, you may have started a research project not in the current tax year, but in that previous tax year, you didn't actually apply for this R&D tax credit. So does the application process go retroactively back to where the project started, or do you need to know ahead of time that you're going to go this route with your tax planning?
You can go retroactive. Typically, it's up to 3 years. So we're currently working on 2021. So you'd be doing 18, 19, 20, and 21. And the reason is that most people, again, don't know about this. So you follow standard amendment processes. If you do go back retroactively to look at this, some things that you guys are going to want to pay attention to is what type of documentation did you guys create back in 2018 that says, here were my goals. In the last couple of years, where if a credit has been audited, that's really what they want to look at is, are you just making things up saying, hey, yeah, I did that 3 years ago? Maybe. Or I have, if you look at my calendar, I had a design meeting that was on there, and I had, a kickoff meeting with this person. I had an engineering meeting with this guy, and, here's a document that was my test results from 2019. We want to look at those and include those as part of your documentation so that it's fully substantiated. The best thing about this credit, Ahmed, and the worst part is that the IRS and Congress didn't say you have to have document A, B, and C in order to qualify. They said, you tell us that you qualify. They didn't give you a requirement. So my job is to help you put forth your best foot by finding those documents with you, by helping to determine those costs. And that's where this R&D credit is great and also at risk. If you have an aggressive provider, they may try and get you a ton of money, but it won't be very well supported. And so you have to, as you guys look at this, you're going to want to find an expert that meshes with you, that's similar in your mentality of aggressive stance, fully substantiated stance, or, super conservative, because there's some estimates that play into this. It's not everything is cut and dry.
Let's talk about the idea of what the IRS considers an entity or a group of entities, because when you do research and development, a lot of times what happens is you may start a vehicle that is essentially a standalone business entity for each asset of intellectual property. So those assets may come together under a corporation. So you may, for example, have a corporation that is People C, and then you have several LLCs that were particularly isolated for intellectual property reasons in lawsuits. Now, how is the IRS going to treat that?
So the IRS goes through standard aggregation rules as it relates to what's called a control group. Are you familiar with control groups?
I think from my understanding, what they do is they look at who owns what, and if it's not substantially different, they aggregate them.
Essentially, and then they allocate the credit based on the expenses. So if I've got two companies, right, and I own both of them, or me and my four buddies, have the same ownership and we both own these two companies. Well, basically what Congress said is you really should be looking at that together, because you're the same person at the end of the day, even though you own two different businesses. So you evaluate everything together, and then you allocate the credit based upon the amount that's input into that bucket of R&D costs, and you break it out back into those entities. So a lot happens all the time. Some control groups are 2 companies, some are 50, some are more, depending on the size.
I see. Well, I'll open the floor for other people who might have questions. I don't want to dominate all the time. Sorry.
I love it. My wife is sick of talking to me about it. So Ahmed, you can call me anytime.
Yeah, I does anybody else have any other questions or any topics specifically they want to bring up, either on their own projects or something they're working on as well? I was saying earlier, not gonna, I hope this doesn't offend all of you in here that are in this business, but it is not my favorite topic. It's like the most dry. I'm like, accounting. So I appreciate you. I desperately need all of you, but it is not my I appreciate that you guys geek out about this stuff. Yeah.
It's
Paul, do
great
you have
to find people
anything
that do
to
it.
add? Anybody else?
Yeah, I have a question. I'm sorry, maybe it's beyond the scope of R&D domestic
Okay.
tax credits in the US, but you mentioned IP and proprietary information and patents and so forth. Can you just maybe sketch how the construction is where American companies establish a company in Europe, for example, in the Netherlands, in order to, what's the way here? Avoid unnecessary taxes by having their IP go through that entity?
Okay. So what it sounds like you're asking is if there's a US entity that pushed their IP to a European entity to reduce their US liability, then can they still claim R&D in the United States? Is that correct?
Right. Yes.
So under that circumstance, we would go back to that control group ideology, which is if I have similar ownership between my US entity and my European entity, then we are considered one whole person. The left arm and the right arm still meet at the middle. And so we would look at that being owned as the same entity, even though it's left arm, right arm, they're still the same entity owning that right. Does that make sense?
Okay. Yeah. So it basically means that if as a company you transfer the IP rights, which are yours, into an entity in Europe, which is also yours, you could put yourself in the position as an American firm to pay, what's the right word here?
Credit of tax.
The fee, thank you, to pay the fee into that European entity, and you could reduce your US tax burden that way. And at the same time, still benefit from R&D tax credits in the US.
Correct. So
Okay, thank you.
the cost that we would allocate, if we go back to the original purpose of this credit, which was in the 1980s, US was like, hey, we need to make sure that we keep up with the rest of the world. So it's a domestic credit. So all the costs that we would allocate for the US in that stance is the boots on the ground, the people in the United States. So if I had a contractor, let's say over in the UK has a great credit as well, but I would not allocate the UK person to my US credit and vice versa. The UK has some different rules about allocating people within the greater European Union, but in the US, we can only pick up people physically located in the United States.
Okay, got it, thanks.
You're welcome.
Hey, Adam.
Yes, sir.
This is Guy Carpenter. Good talking to you. Long time we've been trying to connect. I had a question. I understood that the principle is the tax credit is applicable to the individual or the entity that takes the risk for the R&D investment. And I was wondering, besides that point, which I was very curious about, was about investing in equipment to do R&D with, and how, if that can be counted in also.
So I'll start with the equipment question. So equipment can get broken down into a depreciable property, which, if you buy something, it means you take it over multiple years. In that case, it doesn't qualify for an R&D expense. But there are certain types of things that we can look at, such as mold costs, tooling, etc., that could potentially fall under a different tax code section. And in that case, we can look at claiming those as part of your supplies that get picked up for R&D. And so the code, for anybody who wants to nerd out, to look at it would be section 174, which defines R&D. Under that, it talked about kind of those three costs, right? Talks about wages, talks about supplies, talks about contractors, and there's other things that apply in 174. And then section 41, which is where the R&D credit is, gets a little bit more specific, and it just kind of focuses on that. So Equipment, which is usually depreciable, you'd have to determine whether or not it can be going into 174, which in turn can turn into 41. I think it's a lot of fun, but again, Mandy's over here about glazed over, and she's like, I'm good.
I know that I need it. Somebody said in the interview that my goal is to surround myself with people that are smarter than me. That's why I'm here. It's because I know this, but yeah. So I think
specific piece
to make sure I understand,
go ahead.
The equipment that's depreciated may not be, but the expense of bringing it in and setting it up and the adjustments, the calibration over the course of months in doing the R&D are applicable.
Without getting into your specific situation, I would say generally, yes. It's important to kind of evaluate everybody's specifics. So I don't want to get too general and just have you guys go claim and be like, that guy Adam said so.
No,
because everybody's situation is a little bit different. But generally speaking,
we're doing it. Yeah,
that's right. Generally speaking, you're in the right track there.
Okay, that's a good thing.
Hey, Adam, another situation that I think is probably pretty common. Oh, I'm sorry. Robert, did you want to say something?
No, it's okay. Please.
Another situation, Adam, that's common, which may have some bearing on this is you do contract research and development. And then as the research and developer, you're set up on milestones. And if you don't achieve a technical milestone, you don't take a portion of your remuneration. So I wonder how they handle that, because you're like, well, were you financially liable for the innovation? And in that case, yes, because you don't get paid if you don't reach the goal that you presented as the research and development target.
Sure. Every contract's different in that case. And I'd love to be able to kind of tell you yes or no, but it would be a very blanket statement where I've seen it go both ways depending on the contract. Typically in those situations, the IP comes into play often, because if you're contracting for somebody else, they may own everything that you do related to it. So it's definitely something where get your contract reviewed by a lawyer or by an R&D specialist, to be able to make sure you do have economic and R&D development risk, as well as the intellectual property associated, so that you can claim the credit.
Can you ask that question one more time? You're wondering about who owns it if you're contracted working for somebody else to develop it. Can you, Ahmed? I want to just clarify the question, make sure I understand what you were saying.
So what I'm telling him is that he's talking about who's at financial risk in research and development. And he's pointing out that there's 2 litmus tests now. In my scenario I gave, where you have a milestone payment based on achieving a technical milestone, yes, you are financially at risk as the developer. But what he's pointing out is it may not even matter, because unless you can walk away with some ownership of the resulting intellectual property, it still won't matter. So you have to write your contract accordingly so that you would be able to obtain such an R&D tax credit.
That's correct.
Okay, thank you for clarifying. Bobby, did you have a question? I didn't know if you were.
No, everything's fine. Thank you.
Yeah, Klaus, I saw your mic came off.
Sorry, no, not me.
Okay, anybody else? Adam, do you have anything else?
Saw a couple things in the chat. One said we've got several companies that are working on developing decording equipment to separate hemp. And so, I think that, Bob, was that you?
Yeah, that was me. And that might be a deal where, okay, they've got some R&D that they've stuck in it, that they've already got invested in, probably a whole lot more that they need to do. There's a case where people that are making decoder machines need to get with you and because they need to capture this or document it so they can capture it.
Absolutely. I think one of the things that turns people away from thinking about these tax credits is maybe a lot of you think about this too, which is how much work do I really need to do in order to get this, right? How painful is this? How many guys went through PPP, and decided that was ridiculously difficult? When we start talking about the process and, Bob, if you were to introduce me, like, what does it look like? We first kind of take a half hour just to talk and see whether or not it's worth moving forward. So understand their business, talk about what they do. And again, there's other people on here that do R&D. I'm assuming they follow a similar process. So it's not a sales pitch. Talk to any of us. We're all happy to help you. But, a half hour on the front end to kind of decide whether it's worth it. And then it's going to take anywhere from, 5 to 15 hours probably on their end to gather documentation, identify projects, set up processes for future projects so they're documenting things appropriately. So, I mean, it could be, let's call it 15 hours of their time. Larger companies are going to probably have more because they're going to have multiple people involved. But the return on that investment is typically in the tens of thousands of dollars. And so, we think about kind of what this layout is and do I need to get started on it? Can I do it now? Can I do it before? It's hard to say, yes, I'm going to go commit my team to 15 hours. But again, the return can typically be pretty substantial. And that half hour scoping call at the beginning is really whether we decide it's something that's worth it now or later. Walter, Charles, I know you guys do R&D. Is your process much different?
No, I mean, speaking for us, our process is pretty much the same. We'll have a conversation, just kind of get a sense of their day-to-day, what their business is and, basically why people engage them and just kind of get a better understanding of it. Yeah, we're in a similar space, maybe about, 15 hours cumulative to run the study. So, yeah, I mean, we're in the same page.
Yeah, we are too. Sorry, I'm hiding behind no camera on today, but yeah, it's pretty much the same process for us as well. That half-hour phone call is probably the most important, but yeah, that's how we get it going also.
Yeah. A couple other questions that came up. Is it similar to the oil and gas exploration tax credit as it reduces income? So oil and gas exploration credit, there's kind of multiple things to it. And you've got the expense allocation reduction, and then you've got the credit itself. And R&D is typically a little bit different. The way it's calculated, the way you pull costs for it, but the credit aspect where it reduces the tax liability is going to be the same. So the oil and gas will apply against that as well. But oil and gas, I think, has an expense reduction aspect as well. So happy to chat on that. I think that was Sean, if you'd like to.
I'll send you a connection. I don't see him on here anymore. So I'll send you his email.
Okay. He might have dropped off.
Yeah, he messaged me. I have another couple people also that just messaged me to connect. And so we'll be sure to send you an email intro on that.
That works. Other things that you guys should know, right? You guys can definitely get into positions where it can get very expensive to do so, right? Where you hire somebody to come in. I've seen pay structure on these credits range anywhere from a contingent, 15% for a software company that I know that does this, all the way up to 50% of your credit. As I know, it's ridiculous. But typically, the firms I know that are in the same ethical range, if you will, that do a good job and are going to take care of you and provide the substantiation you need, are anywhere from 20 to 30%. That seems to be about the range where you have technical experts that are actually helping you document and substantiate your claim. You've got people that, know what they're doing, and you've got live people that are taking your specific case into consideration. But there are plenty of opportunities out there where there is software that can try and help you calculate it, and you can do it yourself. And I'm always happy to give recommendations for people that want to go that route. Hopefully that helps a little bit so you guys know kind of cost-wise what's out there.
Adam, this is Ahmed here. I wanted to kind of remind people that the difference between a rebate and a credit, right? So when you do these kind of things, let's say you did some research and development, and then you were going to apply for an R&D tax credit. And then let's say you were able to get the R&D tax credit, right? Now that credit's going to apply for something that happens in the future, correct?
So there's a couple things. If you've been paying tax in the past, it can result in a refund check.
Okay.
If you are, so if let's say in 2018, 19, 20, you did this R&D, you're paying taxes, you're a profitable company. Well, you forgot to claim this. Well, you're going back and you can amend your return and say, hey, we did this R&D. This is what we should get. And you're making your claim saying, hey, this is what we did. There's a few different things from a tax perspective out there when it comes to amended returns. There was a chief counsel memorandum that came out in October that talked about if you're going to submit a claim for R&D based on for a refund check, then you need to submit X number of pieces of documentation. So until that kind of goes through tax court, we don't know how that's going to look as it's constantly changing. But what'll happen there is because it wasn't an actual requirement from the IRS, then it's kind of up in the air about whether people are going to submit all the extra layers of documentation. But historically, all you've had to do is fill out one form that says, I qualify for this much. And then they should refund you. And if they have a question, then they'll let you know. But, that can result in a check refund. Typically, the credit can only reduce your tax liability to 0. Now, the federal credit can also be carried forward for 20 years. So, Ahmed, if you're working on this and you're like, hey, we're not doing well this year, but we spent a ton of money on R&D, but in the next 5 years, we're gonna soar as soon as the development turns the corner, and we're gonna pay a lot in taxes. So you plan now to get your credits in line, so that then come 5 years from now, you have those credits that pull forward to reduce your tax liability.
Now, I think the thing that entrepreneurs have to understand, though, is that if you are writing this credit for and to use it in the future, but then your partner that you're working with gets remunerated on a percentage of the credit, you have to come up with that cash today in order to get that credit for the future. So you're basically now you've invested in the R&D, and now you're investing in this tax credit, right? So I think this is interesting because I even had a CFO on my team that didn't realize this.
Yeah. You've got a lot of people out there too that they don't tell you that, right? They think, oh yeah, I got this credit, I get this cash. What you guys want,
you don't get necessarily money in the mail unless you've already paid those payroll taxes, and we're going retroactively back some years, right?
Well, so what you want to do is you want to find somebody that's going to do what's called a utilization analysis. And this utilization analysis basically will dictate, I should be getting a refund check, or it's going to carry forward, or it's an investment for future years. So you want to find somebody that, again, I told you before that in the industry, there's people that are super aggressive and are going to be like, claim everything now, don't worry about it. And there's going to be people that are going to say, hey, look, I can go get you, $150,000. You just can't use it. Like, you want to know that, right? And so you make sure you find the right specialist that's going to communicate with you about how everything gets used. And that is less common than I would like to see.
Okay. So I think it's a really excellent program for companies in the US that want to invest in R&D, but people who invest in R&D, oftentimes they're not as strong on the payroll side or net profitability. So then you've got this double-edged sword where you're playing with, I can get all these future tax credits, but you also have to make sure that you have a profitable business that's feeding that research and development.
It's true. So yeah, definitely, Charles and I talked about a project a couple months ago, and it was in that same boat. What's worth it? Do we do it now or later? So you find somebody that will help you to get your best benefit, not somebody that's after a cash grab or anything like that. Find the right consultant. There's a lot of us out there.
Very good. That's all for me right now. Thank you.
Thank you.
Well, okay.
Go ahead, Adam.
I was gonna say, I know a lot of people, have that first question, which is, why isn't my CPA already handling this? Most of you guys have accountants, or CFOs, and it's hard to recognize why you're not getting advantage of every tax credit. And so I think for me, one thing that I just want to point out is that there are tens of thousands, if not hundreds of thousands of tax code, revenue rulings, court cases. The funny thing is if you combine just those three things, nobody actually knows how long all of those, pages add up to be. There's estimates that it's 70,000. There's estimates at over 150,000. So when your CPA is doing this work, right, it's pretty common for them to be able to know how to keep you compliant, how to keep you filing your taxes, but they don't always know every program that is out there in order to benefit you. So we work with CPAs across the country, and that's where we provide them the value, and then hopefully they'll reach out to their clients. So if you have questions, work with a consultant that will work with your CPA to help you guys achieve your benefit.
I like it. Anybody
Lots
else?
of information.
I think it's been great. I really appreciated the perspectives and different questions. So if anybody else, I know that there's a couple of us on R&D, a lot of them have had some people drop off. If any of you guys are working on projects and have any other questions. Otherwise, Adam, how do people get in touch with you?
Absolutely. So Mandi will definitely kick out my information. I'll get my email out there. And then it's one of those things where you can go to my website, you can go to leaftaxconsultants.com. Always happy to provide information there. There's a couple calculators if you guys kind of want to just play around with like how much have I spent and what could that mean. As a last thought, and something that you guys can just go look at on your own, or if you have questions, call me. The big thing for 2021 and 2020 is what's called employee retention tax credits. So in addition to R&D, there was a COVID specific program that was released for 2020 and 2021 that can help you get money back on essentially your payroll expenses. And so it's a refundable credit. So Ahmed, to your point before, like you might not get cash, you might get cash. In this case, it's refundable. So if you paid wages out in 2020 and 2021, there's a lot of different ways to qualify for these credits. And so you're going to want to work with one of the providers that can help you navigate the road of what qualifies and what doesn't. But the amounts are pretty substantial. They can add up to $7,000 per employee per quarter. So it's definitely something to talk about. So if you have questions on the employee retention credit or on the R&D credit, or if you guys want to talk tax strategy and nerd out, I love it. Come and talk to me. Happy to kind of be a resource for you.
I appreciate it. Okay. Well, again, this will be recorded. I will actually send a note. I just sent a note to one of our team members to go ahead and put a clip together or put this link, once we get the link edited in the transcription, we'll actually send this to everybody that was on the call today. So you'll be able to connect. And Adam, I'll be sharing and include your information for everybody.
I appreciate it.
And then I just think more and more where we're at in our time frame, for those of you that are in the accounting and space, I would love to put together a list of participants that are, consultants and part of the group in the tax and R&D tax credit. I see there's quite a few of you, Chris and John and Paul and Bob and Walter. I'd love to add you guys or send it out as a link so that our members are aware of who you are and that you're in the industry and able to support and help. So I'd love to, if you guys wouldn't mind sending your information to either Joanne at Global Health Association or myself at Mandi, then we can definitely connect and get you taken care of. So thanks, Adam. I really appreciate you very, very much.
You're welcome.
I'll make sure we get it out. Okay, anything else before we hang up? No. Okay. I'm real quick. We had a really good interview this morning. I encourage you guys to check it out. It'll be listed again on our YouTube channel, very much in the R&D space, but somebody in the hemp space, Vincent, that is developed some incredible products from sugars and biofuels and biobutanol. And of course, Ahmed, I thought of right away when we're talking about this space and design. And so anyways, I encourage you guys, and then we'll be live again next week, tomorrow, also at 10 a.m. And other than that, go to our website if you guys have any questions. Thank you, Adam, for dropping your contact info. Other than that, thank you. We'll sign off.
Thanks, Adam. See you guys.